All right, everyone. We're here tonight, Thursday night, with Ari Levy from CNBC. He's going to help us go through all different tech, and he's very into Silicon Valley, and he knows everything that's going on with a lot of these tech companies. So, Ari, welcome. Thank you for joining us here tonight.
Thanks, Carter. Good to be with you. Sorry if you can hear my kids in the background. They're just in the neighboring room.
Oh, that's fine, man. That's fine. So really, what a lot of our listeners are very excited to know about is they're very new in terms of a lot of them into finance and into the stock market and into learning about these tech companies. And you've had a real rise to prominence going from Bloomberg all the way now here to CNBC. What really got you interested in going into not just finance but tech reporting?
Yeah. So I went to a business journalism school in New York at Baruch College. There was a brief period where they had a business journalism program, master's degree, and then it eventually got folded into the CUNY journalism program, which opened around 2006. So I started in 2001, and that's really what kind of got me into covering financial journalism. But I've always sort of had an interest in numbers, and I was never great at math, but I always enjoyed it. And I had my prior job to journalism was as I worked for a white collar investigations firm in Manhattan, and just did sort of analytical work on investigations. And so a lot of my work was just crunching numbers and kind of turning numbers into reports. And so really enjoyed it in school, because if you can read financial filings effectively, you can get stories without having to talk to anyone, right? And so if you're in a position where it's hard to talk to big name people when you're a beginning journalist, or when you're in school, it's hard to get them to pick up the phone or to respond to your emails. But if you can get stories out of things that are in the public record, that's perfectly legitimate. And the vast majority of people aren't going to dig through filings. So there's tons of great stuff to find out of it. And I always enjoyed it. I got sort of a unnatural high out of reading filings.
What was there during this time, as you've, gone from journalism school all the way through, was there like a particular story in terms of like Silicon Valley, something that was really memorable for you as you've been covering tech and these private companies and IPOs?
Yeah, I mean, I could really go back to, every phase of my career, even going back to school, there was sort of monumental things happening. So I started in journalism school in August of 2001, just a matter of weeks before 9/11. And again, this is business journalism in New York, right? So instantly, my entire program shifted from all of the things we were going to be covering to everything around 9/11. And so, it was all about how local businesses were being affected. Talk to kind of local artists and film directors and actors, and the people, not famous people, but those who had established careers in the industry, and those were the types of people I could get on the phone. So that was notable, right off the bat. When I started at Bloomberg, this was 2003 as an intern. So we were sort of coming out of the crash of the dot-com crash in 9/11. And so there was the rebound, and it was actually leading into the housing bubble. And I was covering the stock market during that time, and did that through, I started covering tech in 2006. And so I sort of moved from covering housing, financial bubble stuff, to covering things like Google IPO and the rise of Facebook, and this shifting, the way that technology was shifting to the web, and these internet companies were becoming really big. And then I got pulled back onto covering finance during the financial crisis of 2008. So that sort of the early stages of the bubble that I was reporting, that was all coming full circle. So you just really there's every every 10 years in the market, there's a monumental moment no matter what. And it seems like in the last, since I've been doing this, it's been more like every 3 or 4 years.
Yeah, you've had a lot. You've really came in on the timeline. Steve Jobs was still at Apple. You had the rise of Facebook. You had obviously the financial crisis, and then even further, really actually closer to where we are now, you had Elizabeth Holmes with Theranos. You had Travis Kalanick and Uber. So you've gotten your fair share of stories here over the last several years.
Don't forget WeWork.
Oh yeah, WeWork. Oh, who could forget that? But I guess that kind of goes into now, like you cover a lot of IPOs and a lot of these companies, that have their rise to prominence. Was there like a specific IPO that you've covered that stands out to you? Was it Google? I know Facebook was a huge IPO, especially to myself. That's when I really got into, stocks and the market. Or was it, recently Airbnb and all the hoopla that went around that?
Yeah, I mean, Facebook is certainly the unforgettable one. I didn't really cover the Google IPO. I was on the stocks team at the time. So it was certainly a story that I followed and wrote about around the edges. Facebook, I was right in the middle of. And I mean, that was, it was fascinating for all of the obvious reasons. I mean, it was so much bigger than anything we had ever seen. They raised $16 billion. And I want to say up until that point, we hadn't seen a tech company raise more than like 3 or 4. And even today, I mean, if you look at there were these ginormous IPOs last year with Snowflake, Airbnb, and DoorDash, and none of them raised more than $4 billion. And they're all among the top 10 biggest ever. So Facebook is just like this scale of which we hadn't seen then and still haven't seen. And what's interesting about the dynamic, why do you do that? If you're going to be worth 50, 75, $100 billion, you have to raise that much money just to have a liquid stock. And so Facebook, they didn't need that much money, but they really didn't have a choice. If they wanted to be public, they had to, and do an IPO, they had to sell that much worth of their stock. So just the value of Facebook at the time they went public. Also, the dynamics were fascinating. I mean, they really tried to optimize for price, and so there was a very minimal pop on the IPO, and then it actually traded down substantially in the following months. And it was, if you look back to the coverage at the time, it's like, oh, this was a disaster. The market missed this. Facebook's going to get crushed on mobile. That was the big story, is they didn't have a mobile play. I mean, Facebook was almost entirely web at the time.
Yeah.
And they had just bought Instagram for $1 billion before, and it was sort of like, well, what is this going to do for them? And so as big and valuable as Facebook was at the time, the company was a shell of where it is today. I mean, it's a totally different company now, and so I think just, as critical as we all are of Facebook and its practices and the issues it faces, in sort of fostering misinformation and such, the story itself has been fascinating. And if you've been a tech reporter over the last decade, it's been one of the biggest things to follow.
How has, in your opinion, how has Mark Zuckerberg and even Facebook changed since the IPO to now? Like, as you've been covering them, as the company has grown, is Zuckerberg kind of the same guy you think as he was before? And is Facebook, obviously they're much bigger than they were when they IPO'd, obviously, but as a company, do you think they're still the same, very similar? I
mean, the thing that we've learned about Zuck is that he is an extraordinarily crafty CEO, in addition to being a brilliant engineer, obviously developing the company and scaling it. He has made some really, really crafty moves. Instagram was a 12-person company that he paid $1 billion for pre-revenue, and if Instagram were to spin out of Facebook now, like God knows how many hundreds of billions of dollars it could be worth. And then WhatsApp, paying $19 billion for WhatsApp at the time was thought crazy. And still, it would be hard to put, it would be hard to make sense of that number based on, perhaps the kind of revenue that WhatsApp does.
Yeah.
But what he did, and this feeds into your bigger question, is Zuck saw that mobile was going to be the interface of the future. This is going back to 2011 or 12 when he saw that. And so if Facebook didn't have wasn't a dominant player on mobile, then they weren't going to make it. It was an existential crisis that he was addressing by paying a ton of money. And the other thing he saw was that, Facebook stock was so highly priced relative to its financials that he could pay, if he was paying in stock, it was kind of free money. I mean, it wasn't immaterial by any means, but I forget what Facebook's market cap was when he bought WhatsApp, but if it was $150 billion, so he was giving, he was basically selling 20%, 30% of the company or something, 15, 20% of the company for WhatsApp. It was okay because like Facebook stock was so highly valued.
Yeah.
So he's just, and he's been able to do that because he's had singular control over the company, which again, there are many things to be critical about, but that's where he's been brilliant. And again, this is not going into, there are plenty of reasons to be critical of him, but
yeah,
I'm singing his praises for the things he's done well.
For sure. And obviously you can go into like tech regulation, that sort of thing that could be coming not just for him, but for Twitter and all these other companies. But really going back to like covering Silicon Valley, how has it changed since you really started? Obviously we've kind of gotten a new wave of IPOs coming up with Roblox and Affirm, Coinbase, Robinhood, et cetera. But how has it kind of changed since those first IPOs when Google and Facebook and, even Tesla to now? How has like the Valley changed?
Yeah, I mean, the biggest change is just the value of those companies. So, the 6 most valuable companies in the U.S. now, the 6 most valuable publicly traded companies are all tech companies. So Apple, Microsoft, Google, Amazon, Facebook, Tesla, not all in that order. And then, then look at companies like, we were talking about PayPal today. PayPal's worth over $300 billion. Netflix is up there. And then, Salesforce, well over 100, 200 billion. If you look at cloud computing, there's a Bessemer Venture Partners, the venture firm, created a cloud index of the top publicly traded cloud companies back in like 2013. And Salesforce was the only company on the list worth more than $25 billion.
Yeah.
And now I just did this analysis, but I want to say now that number's like 18 or 19 companies on, and these are the publicly traded ones. That doesn't include several that are worth that are still private.
Yeah.
And so at the very top, you've got these $1 trillion companies, which if you had said that was going to be the case even 10 years ago, it would have been absurd. And then if you just kind of go through the list of, U.S. companies that are worth $20, $25 billion or more, they're just all of these tech names that a lot of, unless you cover the Valley, you wouldn't even have heard of a lot of them. And so, when I joined CNBC in 2014, there was still talk about, is this a bubble?
Mm-hmm.
And I got made fun of for leaving like a cushy job at Bloomberg to go to CNBC and help start the bureau, because clearly if CNBC was opening a bureau for the first time in San Francisco, it was a sign of the top. Yeah. And it was far from the top, as we've learned. And now, like, you hear talked about like a bubble, but it's not a it's not like the talk isn't around like, is Apple going to crash? Is Google going to crash? Is Facebook going to crash? It's more like, are some of these companies and some of these sectors overheated? Is there a SPAC bubble? Is there a e-commerce bubble? So like maybe there are certain areas that are overheated, but it's kind of accepted now that like the tech is the center of the tech is the heartbeat of the economy. It's the new industrial economy. It's not GE and General Motors and Exxon anymore. It's all tech companies.
And and I'll just interject there. Like if you look at Amazon's earnings report, just as one earnings, they crushed extremely high expectations. And so all these companies, they are crushing expectations, which goes back to your point that we really haven't reached a bubble point, because once they start missing, that's when you can start to think, well, they aren't hitting extremely high expectations. So maybe we are at that point. But as long as these companies in the Valley keep producing extreme numbers, which are better than any other sector you will find, then we're in a point where you're just going to continue to drive innovation, and you never know what could be the next great company that comes out of there.
And also I think we fundamentally have altered our view of what it means to be in a bubble. Like if they're, in this sort of permanent low interest rate environment, what feels like permanent low interest rates, there's so much cash out there, and that's looking for a home, and it just keeps pouring into growth, and growth is tech. And anytime we think we've reset what the multiples for these companies can be, they blow right through them. And so if people are willing to pay higher and higher prices and higher multiples, is it a bubble, or are people just revaluing these companies? And I think that's, it's not a bubble if people keep paying higher prices for it. It's only a bubble once they stop.
Yeah.
And so, in the a stop clock is always right twice a day. Like eventually we will have a substantial bear market, and we had what seemed like it was going to be a crash a year ago, and things bounced right back and then went, blew through the roof of where they had been before. So I'm far from in the predicting game, but I've stopped using the term bubble for the most part.
Well, there is one, and this is going into another topic I wanted to touch on with you.
Yeah.
There was one bubble that did kind of pop, and it was the GameStop bubble. You're the perfect person to talk to about this, because you actually got to speak with the original founder of GameStop. You actually got to do an editorial in CNBC. The viewers can go ahead and take a look at it. I'll post that link in the bio of this podcast. But it was fascinating to hear their take on kind of GameStop's rise to prominence out of nowhere. People thought GameStop, they could go bankrupt, which, I mean, they still could, because the business model is kind of in trouble. But what was your take after interviewing Gary Cussin and getting to learn more about, the GameStop story and the Reddit people behind it?
Yeah, so it was kind of a fascinating way it came about. I had just been, like everyone, was enthralled by the story when it hit, and it became very clear that was like on CNBC in particular. If you just looked at like what the trending stories were, all the 5 top stories were all about GameStop for like 3 straight days. And so it was one of those periods where if you tried to get, like if I was doing reporting on something else and I tried to get it out during those days, no one would have read it. And so unless it was breaking news, I put all my other reporting on hold, and it was just like, well, what can I do within the GameStop story to write something interesting? And so I did a little bit of research on who the founders were, and then sent a LinkedIn message to Gary Cussin, who is based in Texas. And I just said, hey, I don't really have an agenda here. I'm a tech editor at CNBC. I'm just curious, like how you're viewing this. Like, what are you doing right now? Are you just watching the stock go up and down? Are you paying attention? And he wrote me back and fairly shortly, within a few minutes, and said, a lot of reporters have reached out to me, but I appreciate, that you gave it kind of the personal touch. So I'm writing back. And he said, give me a little more detail on what you want before I decide if I want to go on the record. And so I, said, I'm just really interested in what you have to say. I don't have an agenda. And so he called me, and we started chatting, and he was, he gave me a little bit of the history. The company he founded was called Babbage's, and that was a physical retailer in the mid 80s that sold games in Texas and in malls in Texas, and then expanded. And I won't go into the whole history of how it became GameStop, but it was through a series of mergers that it eventually became GameStop. By the time it had been rebranded to that, he was gone. He left in the mid 90s. And so he was a colorful guy who had a lot of things to say, and I could have written a story about that, but he said, you should really talk to my son, because as it happens, just purely by coincidence, my son Ben, who lives in LA, is the CEO of a video streaming company, is huge on Reddit. He's been on Reddit for like 13 years, and Wall Street Bets is like the place where he hangs out. And
Oh,
so he's the
wow.
one he's the one who's been keeping me informed on what's going on. And basically everything I know about this is through him. Um, and so we talked for a little bit, and then I said, all right, well, can you introduce me to your son? He said, sure. And so we did that, and got on the phone with Ben a couple times over the next few days, because the story was just evolving so rapidly. And yeah, it turns out that Ben had been tracking the development of the story from its early days, which really went back to last year when there was some new investor money that came in to GameStop, and so there was a lot of focus on Wall Street Bets about who this new investor was, this activist investor, and what he could do for the company. And so it sort of started to build up into this discussion around the fundamentals around GameStop, and is GameStop undervalued, and is this a buy, and those are the kind of discussions you have on Wall Street Bets, along with a lot of emojis and unkosher conversation. But that's the general tone, and then it was you start to get so much momentum that people dig deep into a lot of the, not just the fundamentals, but the technicals. And so that's when they start to see, you know what, this stock has 100+% short interest. That's crazy. That means that all of these hedge funds are betting for it to die. And here's how short interest works. If the stock goes up by a certain amount, these guys have to cover, and this thing could all unwind. And so all that discussion is happening on Wall Street Bets. And Ben was watching it while his, in this position of like, I grew up with this company. My dad was, so it was just a fun kind of dialogue about how all that was happening.
That's crazy. I mean, you think it's just, millennials on Wall Street Bets that, really have nothing else to do, or even on Reddit that just like to talk to random people. You don't think that it's CEOs of tech startups that are in Wall Street Bets. So really, like, you never know exactly who's behind all these kinds of movements. Do you think something like this, after going through the GameStop and story and learning more about that, do you think that, these Reddit communities, investor groups can really start to do this on multiple levels with different stocks? Do you think it's something that's going to continue? Is that something that you kind of gathered through this interview process?
Yeah, I mean, there's no reason why it couldn't and wouldn't happen again. I think the thing that you have to recognize, and it's even, it's come out with a lot of the reporting from GameStop subsequent to the original stories, is that no matter what's happening, the hedge funds have the advantage. No matter what the rank and file think, the hedge funds have the advantage. They've got the money, they've got the computers, they're doing this all day, they've got the teams. They can jump on momentum just as well as anyone, and they can drown you in the amount of capital they can throw at it. So while the revolution may have started on Reddit, if you look at who the biggest winners were just by sheer cash, not by return, not by the percentage of their returns, but the amount of cash they received, it's going to be the hedge funds and the big institutional investors. They're also the biggest losers. But they're on, it's both sides of the trade. The big money's on both sides of the trade. So it can happen again. It would be unlikely that it would happen the same way, because the hedge funds will be on top of it so much earlier the next time. Any hedge fund that didn't have someone monitoring Wall Street Bets certainly does now. And so it'll have to happen in a different way. But I would be hard pressed to say that this is a black swan event. Now, then, of course, there's the issue of to what degree can regulators hop in, and I don't know the answer to that. I've read some things and I've done a little bit of reporting, but I haven't. We're super early in terms of where regulators could even be on this.
Do you think, what were your thoughts really on, and obviously the GameStop, story kind of started unwinding once Robinhood really stopped purchases of GameStop stock for a while. What are your thoughts on what Vlad Tenev and Robinhood did in that situation? Do you think they made the right call? Obviously, because that's kind of what burst the balloon, in essence, of GameStop.
Yeah, I mean, so having pieced everything together now, and again, it's mostly through reading. I've done some reporting, but there's just been so much reporting on this. they didn't have a choice for liquidity reasons. For the company to remain viable, they had to stop trades, they had to raise money, and then they had to cover the costs of the trades because of what's called T+2. So there's the 2-day settlement time between when a trade is made and when the money changes hands. That they need the collateral to cover that. So Robinhood does great on a, when there's sort of a predictable amount of volume in the market and coming through their app. So they see that like we have 100,000 new signups. So that means we're going to have this much volume. And so we can make sure that we have enough cash based on what we think we're going to see. They couldn't have predicted this. And so they didn't have enough money and they had to go raise a bunch of money. And then they had to come to agreements with the various, the various groups that require the collateral. And so between like lowering some of those requirements and coming up with the money, they were able to get back online. The problem was the communication of that. And it took several days and like other outlets and other people determining what the actual problem was before Robinhood was honest about it. And so clearly it was a PR disaster and one that will be difficult for them to recover from. So that would be my answer to, did they do the right thing? I think they did the thing they had to do and they communicated it poorly. You can ask the question of, is there a fundamental flaw in the business model? And that's a legitimate question, and not one that I am equipped to answer.
Yeah.
But certainly that changes how you have to think about Robinhood as a standalone entity. Do they have to alter their business model in order to be this, $50 billion, $100 billion company themselves?
It does, though, bring me the question to ask you, since you're really into, IPOs and you've studied a lot of these, there's a lot of speculation that they're going to IPO in 2021, Robinhood. Mm-hmm. Does this event really hurt, not them really IPOing, but the brand of the company when they do IPO? Because there's a lot of fanfare, especially when Airbnb IPO'd, and that's in part why you've seen it, do so well since. Do you think it's going to hurt Robinhood on the IPO market?
I have difficulty saying definitively that it will, and the reason is several fold, and it's all based on prior experiences, right? So, Facebook has had so many crises throughout its years as a company and as a public company, and look where it is. Like how many times have we predicted the demise or the collapse or the crisis at Facebook, and it just keeps plowing through. Uber had any number of so many crises, more than I can count, in the couple of years before it went public. And then SoftBank made this massive investment, and it looked like SoftBank was going to lose a ton of money. And now SoftBank's investment actually looks pretty smart. And same with Airbnb. Airbnb had fewer, I think, moral hiccups than Uber, but they had their own share of regulatory issues and like, what are you going to do about the house party? And there would be sort of these one-off stories. And so I think like these things feel like they are permanent and existential at the time they happen. But if you get through it and then you execute beyond that, I think we all have pretty short memories. So I don't think that this is a game changer for them over the long run, as long as they address if in fact there is a systemic business model issue. That's the key.
Yeah. And it's going to be interesting to see what happens with them. Another IPO that I want to touch on, because before we came on here, you told me that you had some news on the Roblox IPO. And so for our listeners out there, first off, Roblox is a gaming type of company similar to Zynga in a way. What kind of news were you able to find out about Roblox before?
Yeah, so they just put out an updated SEC filing. So Roblox is doing a direct listing, which so instead of raising new money in an IPO, they are doing what Slack and Spotify and Palantir did, which is on the day they debut on the market, the shares just unlock from a certain percentage of shares unlock from existing shareholders, and those become available for trading. And so new investors are buying the shares of existing holders. and so it basically clears at a market clearing price rather than their sort of a share sale to new investors. So that's the structure of what they're doing. Their business model is that they sell virtual currency to kids, and kids use this virtual currency to create their avatars, to build up their avatars, and then to advance in the games. And the Roblox platform has millions of games on it, and so all of that action has turned into a business that does, that did well over $500 million in revenue in the first 9 months of last year. So the filing today, they changed their reported revenue over each of the last 11 quarters. So their revenue for the first 9 months of last year went up to like 620. The numbers aren't quite up. It's like up to 620 or so from 580 or so. Not a huge difference, but it was curious. And there was so as I saw the filing, I looked back at there was a Reuters story in late January that there had been some SEC communication with Roblox about how they recognize revenue because of the digital currency. And so there were questions about it. So they had to delay their offering while they cleared that up. So this filing sort of did two things. It changed the revenue numbers, and then it also pushed the direct listing from February to March. Those are the two big things. But the reason that we would even cover that as a piece of kind of incremental news is that Roblox has the potential to be a very, very large company. This is, if you look at how internet companies with internet business models are trading, and their growth is 70% year over year for the first 3 quarters. They really there could be a big fan base for this on the investor market. So again, I don't want to predict where it's going to be. Its private market valuation is $30 billion based on where it raised money last month. So it's just one that I think we have to pay close attention to.
For sure. That's breaking news there, everyone. Ari Levy is breaking news here on the podcast. One other thing, because I know you have to go real quick, and this is a question that a lot of people that are really interested in getting into the type of world you've gotten into ask. What would kind of be your advice for someone looking to break into, covering Silicon Valley or getting into the financial world, whether it's, CNBC potentially one day or Bloomberg? Obviously, you've made it places that a lot of people can't, but what kind of advice would you give someone like that?
Specifically covering news?
Yeah. Someone else just wants to break into the world of Silicon Valley and tech like you have.
So, I mean, I think it's, I came through a journalism background, and I think I'm in a very different world than people in tech. Like if I were on the market for a job in tech, the things that I could do would be kind of limited to content, maybe marketing, maybe business development. It would have to be things that where I have some level of knowledge, but no one's going to hire me to do code, to code or to do product marketing or sales, right? I would have to go back to school for that stuff, or I would have to start at the very bottom. So, it's a different path depending on what you want to do. I think, the good thing, I guess the good answer, the optimistic answer to your question would be that these companies are so big and they do so much now that there are a lot of different, it caters to people with a lot of different expertises. And so if you do have a penchant, if you do have a technical mind, if you're, capable of, if you're good with numbers and you have some coding background or it's something that you can learn fairly easily, there are, a ton of positions that aren't necessarily software development, but where you can benefit from just being able to kind of think critically and technically. So, my advice would be to find the types of companies that you're really interested in, and see what kind of roles they have open, and see if you can talk to anyone, connect with people on LinkedIn and just get a sense of what they do. a lot of times companies aren't what they think, what we think they are. And so under the surface, it might be a terrible culture. It might be a terrible fit. And so before you even like go down that path, those would be good things to know. But certainly like, you know, the standard questions I encourage people in journalism to ask are, you know, what do you love and what are you good at? And if you can marry those two things, then you've got the right track. Um, and, uh, and so, yeah, I mean, there's so many companies out here that are doing pretty wild things that, you know, if you can find positions there and find people that work there that'll talk to you, that's probably a good start.
Awesome. Well, Ari, I know you have to go. You're a very busy man, but thank you for coming on today, and don't be a stranger. Hopefully we can have you on here in the future.
Sounds good, Kartik. I appreciate the invite.
All right. Have a good one.
All right. Take care.